A looming question. Is the American dream turning into a nightmare? The American economy, once a beacon of prosperity, now teeters on the edge of a precipice. The warning signs are flashing: red soaring national debt, rising interest rates, and a stock market seemingly detached from reality. Many Americans are asking a chilling question: when will the market collapse? While predicting the exact timing of such an event is impossible, the current economic trajectory paints a worrying picture. Ignoring these warning signs could have catastrophic consequences for our nation's future. The American dream for many is becoming increasingly elusive. Wage stagnation, coupled with rising costs of living, has left many families struggling to make ends meet. The middle class, once the backbone of the American economy, is shrinking, with many falling into lower income brackets. This economic anxiety is palpable, fueling social and political divisions. The current economic landscape is a far cry from the post-World War II boom that saw America rise to global dominance. Decades of policy decisions, coupled with global economic shifts, have created a perfect storm threatening our economic stability. The question is no longer if a market correction will occur, but rather how severe it will be and what its long-term consequences will entail. The debt monster, a mountain of IOUs threatening our future. Since 2019, the U.S. national debt has ballooned to unprecedented levels, surpassing $30 trillion. This staggering figure represents more than 120% of the nation's gross domestic product. To put it into perspective, this means that for every dollar the U.S. economy produces, we owe more than $1 in debt. This unsustainable trajectory has economists and policymakers deeply concerned. The debt-to-GDP ratio, a key indicator of a country's economic health, has been steadily climbing for decades. Historically, a high debt-to-GDP ratio has been associated with economic instability and even financial crises. While the U.S. has enjoyed a relatively strong economy in recent years, the mounting debt burden threatens to derail future growth. The interest payments on this massive debt are a significant drain on the federal budget, crowding out spending on essential programs such as education, infrastructure, and healthcare. As interest rates rise, so too will these interest payments, further exacerbating the problem. This vicious cycle could have severe consequences for generations to come. Spending spree. Where did all the money go? Several factors have contributed to the dramatic rise in U.S. national debt. Uncontrolled government spending, particularly on defense and entitlement programs, has played a significant role. Additionally, tax cuts enacted in recent years have reduced government revenue, further widening the budget deficit. Military spending in particular has been a major driver of U.S. debt. The United States spends more on defense than any other country in the world, accounting for a significant portion of the federal budget. While national security is paramount, the current level of military spending is unsustainable and diverts resources from other critical areas. Furthermore, rising healthcare costs have placed a significant strain on the federal budget. The U.S. spends more on healthcare per capita than any other developed nation, yet millions of Americans lack access to affordable, quality care. Addressing this crisis while simultaneously reining in healthcare costs is a daunting challenge. Section 4. Crumbling foundations. The price of neglecting our future. The consequences of our mounting national debt are far-reaching. As interest payments consume a larger portion of the federal budget, funding for essential programs like education and infrastructure is being squeezed. This underinvestment in our future threatens to erode America's competitiveness in the global economy. Education, once the cornerstone of American opportunity, is facing a crisis. Public schools, especially in low-income communities, are struggling with inadequate funding, leading to larger class sizes, outdated materials, and a shortage of qualified teachers. This disparity in educational opportunities perpetuates a cycle of poverty and limits social mobility. Infrastructure, the backbone of a modern economy, is crumbling. Roads and bridges are in dire need of repair, public transportation systems are outdated and inefficient, and our energy grid is vulnerable to disruptions. Failure to invest in infrastructure modernization stifles economic growth and diminishes our quality of life. Section 5. The Consumer Debt Trap. Living on Borrowed Time. The national debt crisis is mirrored by a troubling surge in consumer debt. Americans are increasingly relying on credit cards, auto loans, and student loans to make ends meet. This dependence on credit creates a precarious financial situation for millions of households. Credit card debt in particular has reached alarming levels. Low introductory rates and aggressive marketing tactics have enticed consumers into accumulating balances they can ill afford to repay. As interest rates rise, so too do minimum payments, trapping many in a cycle of debt. Housing costs, another major expense for most Americans, have skyrocketed in recent years. Low interest rates fueled a surge in home prices, making homeownership unattainable for many and pushing others into risky mortgages. As interest rates climb, adjustable-rate mortgages are resetting at higher rates, leading to increased foreclosures and financial hardship.